Hello, and welcome back to Boni's Life, your home for navigating the exciting and often turbulent world of cryptocurrency. Today is October 15th, 2025, and what a roller coaster the last few days have been. If you've been watching the charts, you know exactly what I'm talking about. We've just witnessed one of the most dramatic liquidation events in crypto history, followed by a tentative but promising recovery. The big question on everyone's mind is, what's next? In this episode, we're going to dissect the past 24 hours, unpack the global events shaking the market, and most importantly, lay out a concrete trading strategy for the next 24 hours. We'll identify the key technical triggers you need to watch and draw insights from some of the brightest minds and biggest institutions in finance. So grab your coffee and let's get into it. First, let's set the stage with a look at the past 24 hours. The market is a sea of green this morning, a welcome sight after the bloodbath we saw over the weekend. The total crypto market capitalization is sitting comfortably at $3.98 trillion, up a respectable 2.3% in the last day. An impressive 95 of the top 100 coins are showing gains. Bitcoin is currently trading around $112,676, up about 0.8%, while Ethereum is showing even more strength, up 3.9% to $4,159. The real star of the top 10 has been Solana, surging over 5% to hit $206. It's not all sunshine, however, as Binance Coin is the lone dissenter in the top 10, down a slight 1.1%. This recovery, while encouraging, comes directly on the heels of a historic crash. On October 10th and 11th, the market was rocked by the largest single-day purge in crypto history, with a staggering $19.3 billion in leverage positions liquidated in a matter of hours. Bitcoin itself plummeted to a low of $104,782, a sharp 14% drop from its recent highs. This wasn't just a dip, it was a full-blown panic event. So what caused this chaos? The trigger was a major escalation in the US-China trade war. On Friday, President Trump announced a shocking 100% tariff on all Chinese exports, and perhaps more critically for the tech and crypto space, imposed sweeping export controls on any and all critical software. This news sent shockwaves through all financial markets, but it hit the risk-on assets like crypto particularly hard. The market interpreted this as the reignition of a full-scale economic conflict between the world's two largest economies, and traders rushed for the exits. This event serves as a stark reminder that crypto does not exist in a vacuum. Geopolitical events can and will have a profound impact on our market, and as traders, we must always have our eyes on the global stage. However, just as the bears started to get comfortable, the bulls received a dose of good news from an influential source, the US Federal Reserve. In a speech yesterday, Fed Chair Jerome Powell signaled that the central bank's $6.6 trillion balance sheet reduction could be ending within months. More importantly, he left the door wide open for further interest rate cuts. In the world of finance, this is what's known as a dovish signal. Lower interest rates and a looser monetary policy generally make investors more willing to take on risk. And that's exactly what we saw. The market reacted almost immediately, with capital flowing back into assets like stocks and crypto, fueling the recovery we're seeing today. This push and pull between bearish geopolitical news and bullish monetary policy is the central dynamic driving the market right now. This recovery isn't just retail sentiment. The big money is flowing back in too. On Tuesday, following Powell's speech, US Bitcoin spot ETFs saw a net inflow of over $102 million, and Ethereum spot ETFs did even better, pulling in over $236 million. Year to date, Bitcoin ETFs have attracted over $46.6 billion in net inflows, with BlackRock's iBit fund alone now managing an incredible $51 billion in assets. This tells us that despite the gut-wrenching volatility, institutional demand for crypto remains incredibly strong. These are not tourists. These are large, sophisticated investors who see long-term value. As a State Street survey recently revealed, 60% of institutional investors plan to increase their digital asset holdings within the next year, with many expecting their exposure to double. This underlying institutional bid provides a powerful support system for the market. Of course, the recent crash has brought the conversation around regulation back to the forefront. Przemysław Kral, the CEO of the exchange Zonda Crypto, made a very sharp point this week. He said, and I quote, "All cars require airbags for safety during crashes, just as all crypto exchanges need strong regulation to ensure greater stability when markets turn volatile." He criticized some of the giant exchanges for blocking small orders and restricting trading during the crash, which is a recipe for disaster and erodes trust. On the bright side, we are seeing positive steps. The SEC and New York's Department of Financial Services are releasing new, clearer guidance on custody, and a federal framework for stablecoins, the Genius Act, was recently signed into law. This move towards regulatory clarity is crucial for the market's long-term health and will ultimately help reduce the kind of chaotic volatility we just experienced. Now, let's get to the charts and talk technicals, because this is where we'll find our trading triggers for the next 24 hours. For Bitcoin, the entire game is being played around one critical number, $110,000. This level has been a battlefield for months, acting as both a floor and a ceiling. Right now, it's our most important line of support. As long as we hold above it, the bullish recovery narrative remains intact. The immediate resistance we need to break is in the $115,000 to $117,000 zone, where we've seen sellers step in before. If we can decisively break through that ceiling, our next target would be a retest of the recent highs around $122,000. But what happens if that $110,000 support fails? This is the scenario we must be prepared for. Technical analysis from multiple sources, including on-chain data from Glassnode, suggests that a break below $110,000 would open the door to a further correction. The first major downside target is a zone between $100,000 and $103,000. This area is significant because it aligns with the lower trend line of a large broadening wedge pattern that Bitcoin has been trading in, and it also coincides with the 50-week exponential moving average, a key long-term support indicator. If things get really ugly and we lose that level, the next stop could be around $96,500, which represents the mean reversion band according to MVRV pricing models. This would be a healthy reset, shaking out the last of the weak hands before the next major leg up. A drop below that, however, towards $74,000, would signal a much more serious bear market scenario. Now, let's talk about Ethereum and the altcoin market, because there's a very interesting story developing here. While Bitcoin is consolidating, we're seeing signs of a potential alt season on the horizon. Bitcoin's dominance, which measures its share of the total crypto market cap, has started to drop after peaking above 55%. Historically, this is when capital begins to rotate out of Bitcoin and into altcoins, searching for higher returns. Ethereum is leading the charge, showing impressive strength and holding key support around the $4,000 mark, which is also its 200-day moving average. Its hourly MACD and RSI indicators are both in bullish territory, suggesting it has more room to run. Analysts are also pointing to Solana and XRP as top candidates for a Q4 rotation, with Solana's high performance and XRP's ongoing ETF speculation acting as major catalysts. So, with all of this information, how do we trade the next 24 hours? Our strategy must be one of cautious optimism. The market is recovering, but sentiment is still in the fear zone, meaning it could be easily spooked. Here are the technical triggers I'm watching. For Bitcoin, my primary trigger for a long position is a sustained break and hold above the $115,000 resistance level. If we see that, I would consider entering along with a target of $117,000 and then $120,000. My stop loss would be placed just below the critical $110,000 support. I will not be aggressive here. I want to see confirmation. Conversely, if Bitcoin fails to break resistance and rolls over, or worse, breaks below $110,000 with significant volume, that's a bearish signal. A break of that support would be a trigger to either stay on the sidelines or, for more aggressive traders, consider a short position with a target of the $103,000 support zone. For altcoins, the strategy is to look for strength. I'm particularly interested in Solana and Ethereum. I will be looking to buy on dips as long as Bitcoin holds its $110,000 support. If Bitcoin looks stable or bullish, these two are likely to outperform. A good entry point for Ethereum would be a retest of the $4,100 level, while for Solana, I'd be watching the $200 psychological support. The key here is risk management. In this volatile environment, using stop-loss orders is not optional, it's essential. Keep your position sizes reasonable and avoid excessive leverage. The market just showed us how quickly it can turn, and protecting your capital is always priority number one. In summary, the crypto market is at a fascinating crossroads. We have survived a historic geopolitically driven crash and are now being propped up by dovish central bank policy and relentless institutional demand. The technical picture for Bitcoin is balanced on a knife's edge at the $110,000 level, and a major move is likely imminent. Meanwhile, the stage is being set for a potential altcoin rally. Your job as a trader in the next 24 hours is to watch these triggers, respect your risk parameters, and be ready to act decisively when your conditions are met. It's a time for sharp focus, not for emotional decisions. Thanks for tuning into Boni's Life. I hope this analysis helps you navigate the exciting day ahead. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next update. Stay safe, trade smart, and I'll see you next time.